Asia leads with Nikkei and Korea surging 138 to 215 base points, while US commodities modestly 12 to 20 base points. Is Asia decoupling from US or confirming recovery? When semiconductor index crashes 100 base points after surging, but tech ETF barely moves, is this healthy profit taking or conviction breaking underneath? Volatility crashes 369 base points to lowest level, but yields spike 53 to 69 base points simultaneously. Is this risk on confidence or just bond selling? Rallies 138 to 215 base points and US consolidates, but Europe sells across the board. Is this Europe weakness or regional rebalancing? When crude sits flat while energy equities sell and volatility index crashes but yields spike, what is the real market signal underneath? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look. Let's get into it. Asia is leading today. Nikkei closed up 138 base point at 60,537. That's a strong conviction. Korea closed up 215 base points at 6,615. That's an extremely strong conviction. Seoul outperforms Tokyo by 77 base points, telling you Korean institutions are most committed. But US is consolidating after recent strength. S&P 500 closed up 12 base points. Nasdaq closed up 20 base points. Dow closed down 13 base points. US institutions are taking profit, not aggressively buying. That tells you recent strength executed slightly, but futures show different picture. S&P 500 futures repriced at plus 17 base points. Nasdaq futures repriced to plus 20 base points. Dow Jones futures repriced to plus 16 base points. Futures are slightly positive heading into Asia strength. That's a confirmation. Taiwan closed up 176 base points. Taiwan participating in the Asia rally. Hong Kong closed down 20 base points. Hong Kong lagging. Shanghai closed up 16 base points lightly. Australian index closed down 23 base points, breaking. That's the first signal. Asia rallies led by developed markets. China lags, Australia sells. This signal is real. That the war sector leads confirms. Semiconductor index closed down 100 base points. That's a sharp reversal after 4 consecutive days of strong gains. Profit taking is confirmed. Technology ETF closed up 23 base points. Technology ETF barely moved while semiconductor crashed. That tells you broad tech is holding support even as semiconductors profit take. That's a healthy divergence, not panic selling. Semiconductors overextend after surge. Tech catches the bid. Financial ETF up 2 base points, barely holding. Material ETF down 14 base points, breaking slightly. Energy ETF down 18 base points, logging. That's the problem. Crude is flat, but energy equities sell. Energy buyers don't believe the commodity strength. Industrial select down 3 base points, flat. Industrial ETF down 8 base points, light. Healthcare ETF up 16 base points, holding. Utilities up 10 base points, holding. Real estate up 20 base points, bouncing. That sector picture shows semiconductors taking profit, tech holding, energy logging crude, a cyclical slide. Asia opens into consolidation mixed with opportunity. Asia regional picture shows developed markets leading. Nikkei closed up 138 base points. Japan bounced with conviction. Tokyo is participating in the rally. Korea closed up 215 base points. Seoul is must committed. Korea's 77 base points advantage over Japan tells you Korean institutions are most bullish. Taiwan closed up 166 base points. Taiwan participating strongly. Taiwan's semiconductor strength is real, but Hang Seng closed down 20 base points. Hong Kong barely held a negative. That tells you Hong Kong institutions are cautious. Hang Seng Tech up 77 base points, held support. Hang Seng Financials up 5 base points, flat. Shanghai Composite closed up 16 base points, lightly. China bounced barely. Singapore index down 61 base points. Southeast Asia light and selling. Australia down 23 base points, breaking into weakness. That divergence is a regional clue. Australian dollar up 55 base points tells you Australian capital is real, rotating toward risk. But Australian index is selling equities tells you Australian institutions are rebalancing. Chinese currency down 11 base points confirms yuan strength returning. China is defending currency into Asia's strength. Volatility index closed down 369 base points to 18.02. That's the lowest level in recent days. Fear is easing hard. That's a major signal. But 10-year treasury yield up 60 base points to 4.33. 5-year treasury yield up 69 base points to 3.94. 30-year treasury yield up 53 base points to 4.94. 13-week treasury down 8 base points to 3.59. When volatility index crashes and yields spike simultaneously, institutions are selling bonds aggressively. They are repricing growth expectations higher. That tells you institutions are recovery, not fear. Risk on confidence is real. US dollar index down 4 base points. Japanese currency down 5 base points. Safe haven currencies are weakening tells you institutions are rotating toward a risk. European currency up 4 base points. Germany pound up 4 basis points. Euro and pound strength confirms dollar weakness into risk on. Crude oil flat at 96.37. Oil has no conviction but holding. Gold up 18 base points, bouncing with yields. Copper up 9 base points, barely moving. When crude is flat but yields spike and precious metals bounce. Commodity markets are confused. Oil does not follow yields. That's the signal. Korea closed up 215 base point is Asia's strongest conviction signal today. Seoul is most bullish. If Seoul opens and extends this rally, Korean institutions are committing to recovery. If Seoul opens and reverses lower, Korea's cautious returns. Korea is a first execution test. Watch Seoul's opening volume. If heavy on bid, conviction is real. If light, overnight moves were positioning only. Nikkei closed up 138 base points. Japan bounced with conviction. If Tokyo opens and extends Japan confirms recovery. If Tokyo reverses, Japan's conviction was light. Hang Seng closed down 20 base points. Hong Kong broke slightly into weakness. This is the breakdown test. If Hong Kong opens and extends lower, weakness spreads. If Hong Kong stabilizes, weakness is contained. Shanghai Composite closed up 16 base points, barely bouncing. Watch Shanghai's opening execution. If Shanghai bounces, China validates Asia rally. If Shanghai extends lower, China's caution pulls Asia down. Crude oil flat at 96.37 must hold for energy sectors to gain conviction. Watch crude momentum into open. If crude extends higher, energy validates Asia bounce. If crude lower, oil weakness become contagion. That's a watch signals execution pivot point today. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am James. See you in market.